Welcome to the daily update, where I'll go over the action in the market for Tuesday, November 25th, and we'll see how things look for Wednesday, November 26th. All right, well, we're improving. We're not really seeing growth taking much of a leadership role. It's improving, but it's not really on the offensive right now. And we're kind of getting close again to an all-time high with the S&P, and we've switched back to positive across all three time frames. Now, the 20 period moving average had been coming down. We got above the 50. It didn't take much to get above the 20. So that has switched things back over to positive that way. And the ADX, our trend indicator, it has switched back over to positive, and the Parabolic SAR has turned over to positive. So we're seeing improvement with the technicals. Now, we are in Thanksgiving week. We were below average with volume on Tuesday. We're likely, unless something really big happens, likely to be below average on Wednesday. Of course, there will be no average on Thursday, and then it'll be a shortened day on Friday, which can either produce a real comatose environment where not really much happens, or if some big player comes in, they can have more of an impact on whether we go up or down. So we're just kind of switching over more into holiday mode. We are improving, and the declines that we had been seeing um, are at least in the background. Some of them, like the Hindenburg Omen negative signal, that's still there. And we'll kind of have to see how the rest of this week plays out. And then maybe next week is when a little bit more conviction develops, because we're not seeing any conviction in the short term, either positive or negative. Our short term indicators are just drifting around between positive and negative. We have an up day, they improve. We have a down day, they get worse. Okay, so between now and the end of 2025, I have a program called the SPX Investing Program, and feel free to check that out. It's free, and you get immediate access to the videos where they're delayed on YouTube and Rumble. There are additional videos that I post there. So check that out and see if that's something that will be of use to you. All right, so right at the open, we had pretty much a flat open. The futures weren't all that active, up a little bit, down a little bit, a lot unchanged, and that ended up leading into a flat open. And then we saw a big drop right after the open, but it didn't last very long. We came right back up, and then we were able to climb back above the daily pivot at 66.84. And then we kept going up. We climbed above R1, 67.37, and we hit the 67.50 level. And we chopped them above and below 67.50, another one of those round psychological numbers. And we climbed to close slightly below R2 at 67.69. So not any real selling conviction that took place. We saw that on Monday, Tuesday. The market gets some gains and is tending to hang on to those as we go into the close. We were up 0.91%, so we're almost up, what, 4% since the big drop after last Thursday. That's just a round number. It's actually probably three something there, but we were up 0.98% on Friday. We were up over 1.5% on Monday, another 0.91% gain on Tuesday. So yeah, the charts are starting to look a little bit more positive there. But we were below average with volume, not a real surprise in that regard. Positive on all three time frames. We're right back down to 4% now with the 10-year yield. So that's helping stocks as well, even though interest rates really haven't been that big of a deal. And it's kind of interesting now that there's been a little bit more dovish talk coming out of the Fed, because after the Fed met last time and Jerome Powell said uh, a rate cut isn't a given in December, and then we heard a bunch of FOMC members kind of copy that. Well, the past week we've been hearing more dovish talk, and now interest rates are coming down. And if they do make the rate cut in December, is the 10-year yield going to start to go back up again? Even though that defies logic, we have been seeing that happen at times. And not really, I mean, there's all kinds of geopolitical things going on. There's talks about a potential peace deal between Russia and Ukraine. We'll have to see how all that goes. And really not much coming out as far as the trade deals and tariffs right now. So we were able to recapture the 20 and 50 period moving averages, so that switches us back to positive. I use moving averages to determine if we're positive or negative in the bigger picture. And the optimism around the December rate cut, that seems to continue to be building, and that's more positive. It was really the threat of that rate cut not happening. That was kind of the catalyst that ended up taking things lower. And then techs and semis, they are underperforming right now. They're not taking a real big leadership role. And value did outperform growth in Tuesday's session. So that's a little bit more of the defensive side of things. And then healthcare, which is a defensive area, it is really doing well. It, as of Tuesday's close, it's up 10% just in November. So is it because it's a good investment, or are we seeing more of a bigger picture shift over to a defensive sector? That's kind of what we're trying to figure out right now. Small caps and mid caps, they like the idea that interest rates may be cut, that the market's favoring that now, because the market always develops some kind of a scenario, even if it goes against what somebody came out and said. If they get a little bit of a catalyst to shift the scenario, either positive or negative, they'll do it. And that's what we've been seeing lately. And then Fed Governor Moran came out and said that he will not dissent at the next meeting in favor of a larger rate cut because there are other FOMC members who will vote to keep rates unchanged. All right. And then the National Economic Council Director, Kevin Hassett, has emerged as a front runner for the next Fed chair. So we'll see how that works out. And we're back below 20 with the VIX, so that's more positive. We're at 18.56 there. We still have the confirmed Hindenburg Omen that will stick around for a while. And the Parabolic SAR, as I mentioned, that's turned back to positive. And the optimism over the December rate cut is continuing to build. The dollar was down, which is likely helping stocks. Interest rates were down. We're at 4% with the 10-year yield. But we're still extreme negative. We're improving with sentiment, but we're still coming in at 16. When we get below 25, that's when we're extreme negative. But we have been ticking up. After last Thursday, we were at 6. Then we went up to 11. Then we went to 14. Now we're back to 16. So it's just kind of chopping its way higher there. And we are now looking positive with the ADX, but we're not trending. We're below the moving average. We're below 20, but now it's positive. And the bias is positive with the up day and the momentum. Instead of being mixed to negative, I switched this over to mixed to positive because there are some improvements that are happening under the surface with the S&P. And we had a whole list of economic reports, and I've just kind of given up for now. Probably next week I'll try to hone in again on that and look at the different calendars. But it's we get things on different days, and some of it's late, and we get a whole list one day, and then Monday we got nothing. But retail sales came in up 0.2%. Now that was less than the 0.4% that was expected. And retail sales, that helps the economy when they are really strong. Last time they came in up 0.6%. If you take out autos, it came in as expected, up 0.3%, but half as much as the 0.6% rise we saw in the previous report. Then PPI came out as expected, up 0.3% month over month. Last time it was down 0.1%. Year over year, it's ticking up to 2.7% on an annualized basis, where last time it was calculating out to a 2.6% increase there. When you take out food and energy, like I always say, the things that you have to have, it was up 0.1%, which was less than the 0.2% expected. Last time it was down 0.1%. Year over year, this is coming down. It's 2.6% annualized, where last time it was calculating out to 2.8%. Consumer confidence, folks are just not real optimistic about things right now. 88.7, they thought it would be 93.3, and it's down from 95.5. A year ago, we were at 112.8, so you can see how things have dropped that way. And FHFA housing price index was unchanged. They thought it would be up 0.3%. Last time it was up 0.4%. The Case-Shiller home price index, a little bit less than expected, up 1.4%. They thought it would come in at 1.6%, which is what we saw in the last reading. Pending home sales up 1.9%. They thought it was going to be unchanged. So this is actually a little bit stronger. And the prior, it was up 0.1%. And then ADP comes out with their reports once a month. They're trying to switch over and give more of a weekly stance on things now. And so we don't really have a report. We just have a quote from them saying for the 4 weeks ending November 8th, U.S. private employers shed an average of 13,500 jobs per week, according to the NER Pulse, a weekly update of the monthly ADP National Employment Report. So we are seeing some weakness in that regard as well. So don't have all the charts, just the charts that seem to be helping us a little bit here. PPI, the total, is up just a little bit here on a year-over-year basis, where the core is coming down. That's more the inflation component. So the market liked that. Goods are going up, services are going down. So, which is really the opposite of what we've been seeing lately. So that's a little bit inflationary there. And then processed, excuse me, processed versus unprocessed, both going up on a year-over-year basis, which could be somewhat inflationary there. Then just looking at the numbers, and I don't know how useful this is, the year-over-year rate of change does have us going back up here with PPI, and we were negative in the previous reading on a month-over-month basis. Now we're looking slightly more positive. Then we look at the core PPI, which is leveling out here on a year-over-year basis and declining on a month-over-month basis. Then retail sales, again, dropping down a little bit, but still above zero. Month-over-month coming down, but still positive for that reading there. FHFA House Price Index is dropping down a little bit, but it's still quite high overall. And then the Home Price Index from Case-Shiller also coming down here as well. Consumer confidence. The blue line, that's the basic reading where it is dropping off. We're also seeing how people are feeling right now. That's the purple line coming down, but not quite as fast with how people are feeling looking down the road into the future. And then year over year pending home sales, negative, but less negative than the previous report. So it's weird. We didn't get any reports on Monday, and we get a whole slew of them in Tuesday's session. All right, this is a chart that we do see once a week. We've really dropped down here as the market has been under pressure. We got up into the 90s and we were hanging around in the 80s. We've dropped all the way down to the 55 now with this latest reading. So we're getting more to equilibrium as far as being overbought or oversold. And then thankful there's no Thursday this week because Thursday's been the most negative day of the week in 2025. Well, people will be eating a lot of food that day. We'll see how Friday ends up working out, whether that's positive or negative. It's a shortened day, less likely to see a lot of volume that day. And then the discretionary versus systematic approaches, they have been coming down as the market's been under pressure. So that's not really a surprise there. And then realized and consensus earnings per share growth, they still have small caps just going to the moon, turning into large caps here when you go out to 2026. A little bit more subdued when we look at the S&P. The takeaway is that we're going up here. We're also going up with the equal weight, kind of leveling out here with the NASDAQ 100, but still going up slightly. And also see the mid caps going up as well. This is why the market becomes overvalued because earnings are looking good according to this, heading off into the future. And then Deutsche Bank's Fed forecast remains mildly more hawkish than the alternatives. So just kind of coming in flat here, but the market is starting to anticipate that the Fed will cut rates in December, and that's becoming more of the conventional consensus. And then ratio of Bitcoin price to production cost, yeah, it's coming down now. And so it's like, okay, why are we mining for all these cryptos, especially Bitcoin, if we're just going to break even if we get them? Because the production cost is high, it's set at one level, and then what the current market value is, they're pretty much even with each other right now. And this could be weighing on Bitcoin as well. And then almost no central banks are hiking rates. All right, they've got them up here, but they're not continuing to do so. And then this, we see it, knowing that we're overvalued here. The S&P coming in on this chart at 22. That's above the 20 level, with industrials, discretionary, and tech still being even higher than that. Still overvalued, but under the S&P valuation is communication and staples. Still have energy and financials down in the fairly priced area. And short interest for the median S&P 500 stock, NASDAQ 100, and small caps here. A lot more short interest. That means folks are anticipating that prices will go down. So we're seeing more there where it's more even when we look at the NASDAQ 100 and S&P 500. And then more people are renting now. The median age for first-time home buyers is just really going up these days as people are home prices are still very high, interest rates have gone up, and folks just can't do that now. And so they're having to rent for longer. That's kind of the takeaway from this. And then this looks at the CPI and PPI now in hand for September. Core PC inflation tracking around 0.22%, very close to the core CPI print for the month, any lower than this. And the 12-month rate, when you annualize that, will tick down to 2.8. That's kind of what they're coming away with here, what they think is likely to happen on a month-over-month basis, and then when you annualize that year over year. And net capital inflows, foreign private purchases of U.S. equities total a record 646.8 billion over the past 12 months. Over that same 12 months, foreign private purchases of equities outpaced those of treasury notes and bonds. Stocks are still the place to be. If you're a foreign investor, you tend to get into stocks more than some of the other instruments, including bonds. All right. And then asset allocation survey, just showing, I'm not going to go through all of this. You might want to pause this and look at it, but folks are showing how they're positioning according to the different assets that are available to them. And then sector re-ratings here, where we have the high PE and then coming down to the low PE in tech. That's the area that's usually most overvalued with discretionary and industrials. Communication still a little bit above that 20 area to the upside and also to the downside. And then we start dropping under 20 as we get down into the other areas where staples have been seeing a bit of a pickup above the 20 level as well. So here is the chart, pretty much a flat open, but we immediately just went boom, but then we came right back up. It's like an elevator ride, the express elevator, and then we stayed underneath the unchanged level. It looked like, okay, we're just going to chop around here after we had this initial thrust down and then up. Well, we were able to get above the unchanged level, get above R1. We kind of stalled out at 67.50 for a while and then broke to the upside, closing a little bit below R2. And not much of a change with the initial overnight session here, but we were pretty much flat, and then we saw most of the strength happening during the day on Tuesday. We are improving here with our intraday large cap growth and large cap value chart. The bigger picture is we never stopped being positive longer term. This is the weakness throughout November that we've been seeing. Can we see more follow through with this? Now, the red line is still above the blue line. That means value is outperforming growth intraday. An improvement here, enough to get back above the moving average with our intraday growth to value ratio for the S&P. And you can see growth was actually down where value was up. And it's like this isn't really offensive here, but a little bit more of an outperformance with the mid caps and a little bit of an underperformance with the small caps. But that's where a lot of the strength came from in Tuesday's session was in the mid caps and small caps because they like this idea of a rate cut in December. So we're bouncing back up and improving here with our small cap growth to value ratio. We turned up, but we're still not very strong here with the mid cap growth to value ratio and just ticking down a little bit here with our S&P growth to value ratio. So this is still continuing to look more defensive rather than offensive. A little bit of a tick up, but we're still in the rainbow with this growth to value ratio. Coming up, it's still below the moving average here, the 50-period moving average with discretionary to staples. And we're just a little bit above the 50-day moving average now. And that was one thing that was recaptured, not only for the S&P, but a lot of the main indexes and areas were able to get back above their 50-day moving average. So we're switching back and looking more positive in that regard. So this is now looking more positive with the large cap growth ETF, and you'll see other charts as I go through them here. Now we've changed back over to positive with our trend because the green line is now crossing above the red line, but the ADX is going down below its moving average. So right now we're not trending. Same thing here in the intermediate term, positive, but dropping below the moving average. And we did drop off with volume here. We're now down to below average, where Monday was a pretty healthy volume day. Looking all green again with our gamma exposure chart. So we closed here at 67.66 if you round that up. And it's kind of weird how we see this big blip over here, but we still are likely to see overhead resistance at some of the round numbers here, which are also strike prices. But this has gone from being quite negative a few days ago to now being a lot more positive from a gamma exposure perspective. Still seeing a pretty high fear with the Ulcer Index. That's an end of day reading that looks at sentiment. But we're back above 20 with the VIX, both with the line chart and bar chart, dropping down below the moving averages with the volatility of the VIX, which typically happens when the VIX goes down, the volatility goes down as well. And we usually get this on Friday, but for some reason we got this earlier on here. I don't know if this is an AAII thing or a stock charts thing, but individual investors are still net bearish overall with the latest survey that we have here. And we are coming down with this fear gauge. We're also declining with this other fear gauge. So the fear and greed index is still extreme negative, but improving. Where here we're seeing some more fear actually coming out of the market. But then we switch over to our equity put call charts, and they're really going up. Again, this could be hedging ahead of the 4-day weekend that we're going to be having. And it's an American holiday, and lots of crazy things are happening here. So we'll see if this continues to go up. Now, that's turned our 5-day chart back up, where we had been declining, which is positive. Now we're starting to go back up, which is seen as more negative. And we never did start to go down with the 10-day chart. That's continuing to go up. And a little bit of a bounce up here with our risk on to risk off ratio after we had been declining. Again, the bigger picture is that this is still positive. We have been just treating this as more of a pullback. And so far, it now is looking like it's improving. And also bouncing back up a bit here with the bigger picture, still positive after the pullback with the high beta to low beta chart. We're still dropping off here with momentum stocks. They're underperforming the S&P, which is not necessarily a positive thing, but we are coming back down into the range with the volatility risk premium. So there wasn't really an awful lot of fear here. We were dropping down, and now there's even less fear when we look at this sentiment gauge. We are improving here with the advanced decline line based on price and volume. We're back above the midpoint, both with the short and intermediate term advanced decline ratio. We ticked up, but we're still below zero with the advanced decline oscillator, but that's improving slightly. Looking better here internally, a new breakout and the new highs, and we're above the moving average with the 5-day chart. We're starting to turn back up with the 10-day chart. And now we're getting a bit of a mixed picture here. Our smart money indicators are switching back and looking more positive. In the bigger picture, accumulation distributions back above the moving average. The boom indicators above its moving average and climbing as well. So this chart is positive. We're kind of flat right now with the Chaikin money flow. The histogram's negative, but it's becoming less negative, so it is improving. Where we're turning back to full-blown positive here with the Chaikin oscillator. So 2 out of the 3 are positive. The one that's negative is showing some improvement and is flat. We're still negative with the vortex. The red line is above the green line, and we're coming back above the moving averages with our advanced decline line studies across all the indexes that we follow here. And this is an improvement with those stocks above their 20-period moving averages in the S&P, back above 50 after we had spent a number of days below 50. Also back above 50 with the 50-period moving average study, a little bit above 50 with the 100-period moving average study. We never dropped below 50 with the 200 moving average study, but this is also improving there. So in the short term, we're kind of hitting this overhead pivot. It's hard to see here because the pivot points for December are here, but that's about where we topped out and are hitting some pivot point overhead resistance on the daily side. And we are back above the 50-day moving average, but we dropped down to below average with volume. So we're seeing an improvement here with the 20, 50, and 200-day moving averages. Above the midpoint, but not extreme with the Stochk RSI. We're above the midpoint with the Williams percent R, above the midpoint with the CCI 14, and improving, but still below the midpoint with the CCI 20. No real conviction here. Improving in the short term, improving in the intermediate short term, trying to turn up, but still negative with the long short term stochastics. And the force index is positive again. It turned positive after Monday. we're starting to reclaim even some shorter term moving averages here. And some of that is because the moving averages were bunching up with each other because the 10 moves quicker and it was coming down to the 20 and 50. But we're above all the plotted moving averages here on this chart with the bow tie. And we are improving with the short term trend. We're turning back up with the green line and the blue line. And we're above the 20 period simple and exponential moving averages. So that's why the short term is positive. And we're coming up to the rainbow here. Now, we spent some time down here, so the lines are getting a little jumbled. If we can continue to go up, that'll smooth out the lines and make the short term trend show more conviction. And we're above the midpoint in the +1 channel with the standard deviations chart. Intermediate term crossing back above zero with the balance of power. So that's now turned back positive. We're still getting crazy colors here with the go no go, which is more of a no go currently. And we're getting back above the midpoint with the highest high, lowest low value chart, improving after being extreme with the TTM squeeze and coming down. We're not moving quite as fast now with the price here. And you can see we still really haven't broken this series of lower highs and lower lows. Now, a good breakout day, either this week or often the next week, it could break what we're seeing here. But the chart pattern itself is still looking just a little bit vulnerable after we came back and filled in these gaps that we had had earlier on back in October and into November. And then we're improving, but still below zero with the ease of movement. We're still negative with the Arun. We're turning back positive again with the McClellan oscillator for the S&P. That is now back above zero. So we're starting to turn up with the summation index based on price and volume. Also back above zero with the NYSE McClellan oscillator. So we're ticking back up based on price and volume with the summation index for the NYSE. Swirling trading oscillator has been positive now for the last number of days. We're crossing above the midpoint based on price. We are positive, but still not quite above the midpoint based on volume. Momentum is still negative, but improving. We're trying to turn up with the PMO, turning up based on price, but still below the moving average. Not turning up and getting as close to the moving average based on volume, but we are improving with the PMOs that are rising. That's getting to a pretty healthy reading, climbing back above 50 with the buy signals, and slowly starting to turn up with the PMOs that are above zero. And we're positive with the Elder's Impulse system, and this is a big change here. The Parabolic SAR now has a dot underneath. That has switched to positive. And we are improving, but we're not above the moving average with the slope oscillator. And here is the intermediate term trend. We're getting back above the rainbow, and we didn't spend a lot of time here. If we can stay above this, the lines will start to go back up and look a lot smoother. And then we look at the MACD improving, but still below its moving average. So we are improving, but we're negative with the short, intermediate, and long-term oscillators. Turning back up, but still negative with the Copic curve. Getting back up into the green area, showing a little bit more positive conviction with the Sean trend meter. Still below 50 with the money flow and the ultimate oscillator. Still above the moving average with unbalanced volume. Starting to cross back above 50 with the intermediate and short-term RSI. And we are positive with the bullish percent index. We saw some point and figure buy signals come back in, and we're improving. We're above the moving average. And we are improving here, but we're still below 50 with the NYSE bullish percent index, and improving, but still below 50 with the NASDAQ 100 bullish percent index. Improving, but not quite above the lines yet with the blue line and the red line with the intermediate term trend based on 50 periods. Back above the 50 period simple and exponential moving averages. That's why that's the intermediate term trend is positive. So we're back above all the moving averages. Now, because we came down, we're seeing these crossing over each other. If we can stay above this, eventually these lines will smooth back out. And we're coming right into the middle with the 20 period simple moving average of the open, high, low, close. So this could be acting as a little bit of overhead resistance. And we did bounce off the lower end of the Ichimoku cloud, and now we're back above the cloud and staying above it, getting above the red line and the blue line. The green line is going up that short term. It'll be more positive if we can see the blue line cross back above the red line. The red line's long term, the blue line is intermediate term. And we're up 2.47% so far for the week. So we're still holding up okay here with the weekly chart. And we're looking back to positive now with the Heikin Ashi. We're turning positive again since we're black here with the Kegi chart, We're still negative with the Renko chart, but we are turning back and looking more positive with the three-line break chart. And we had a new X drawn in here as we were going up with the S&P, so this is improving, but still no signal being generated. In long term, we're improving with the 150 and 200 moving averages, and we're waiting to see if this will happen. We had the initial signal back last Thursday with the big down day. That's when we had an extreme negative reading, and we need to get up to this red line by December 5th for a ZWAG NYC breadth thrust to be triggered. If that happens, that could be quite positive going forward. Then looking more positive here with the short term and even intermediate term, when we look at the different uh, asset classes here, and they still have us negative here with the mid caps in the short and intermediate term, where all the other indexes are back to positive. And we had utilities and energy, which tends to be more defensive unless you want to count utilities as a growth area because of EVs and AI, acronyms galore here. But see how healthcare, that's a defensive area. And it was up the strongest and it's leading things right now. Discretionary, that is good. That had a good day. Staples also had a good day. But then you see where communication, it was up nice, but underperformed when compared to other sectors. And then we had tech, which was up just about a quarter of a percent. So it'd be nice if these areas did a little bit better than what they're doing. And so we're seeing some green and then a little bit of red along the way as the Nasdaq got into a bit of a bumpy time after the open. That was that big down move. But we're setting another 4-year high with the healthcare sector. The dollar is back down under 100, which could be helping stocks. Real estate seeing a bullish MACD crossover. Real estate likes the interest rates may come down. And we're also seeing a bullish MACD crossover with communication. That's good. That's growth. And then we came down here 22.8, 22.7, then we got up to 22.9, then back above 23,000 with the Nasdaq. S&P first crossed below 6,700, now it's back above it. Canada seems to be doing a little bit better these days as well. And then healthcare. This has been the strongest area in November, a BPI crossed above 70. So it could be getting a little overextended to the upside there. And when Nvidia's down, it kind of deflates the whole parade overall. But Microsoft was up a little bit, as was Apple and Microsoft. And then Google, both of those stocks were up. You had Amazon and Tesla up a little bit. Meta was up. So, I mean, it was a good day, but when you compare growth to value, it wasn't that great of a day. You can see pretty much all green here when we look at healthcare. So the Dow is back above its 50-day moving average and a little bit above this pivot point, positive with the Elder's Impulse system. And you can't see it here, but we are above the 50-day moving average with the Nasdaq and positive with the Elder's Impulse system, above the 50-day moving average again with the Nasdaq 100, positive with the Elder's Impulse system. But the momentum is improving for the Nasdaq 100, but has not turned positive. And we're getting back above the 50-day moving average. We're still below the 20 with the Qs. So we've reclaimed the short-term trend with the S&P. We have not reclaimed the short-term yet with the QQQs. And small caps, they were up 2.5%, but we're just kind of coming back into where we've been before. But we did reclaim the 50-day moving average with the S&P 600, and we also reclaimed it with the Russell 2000 small cap index and improving up over 2%. RSI is above 50. We're trying to turn positive here with the momentum, looking at the MACD. Positive with the Elder's Impulse system. We are above the 50-day moving average. So really, they could have turned this back to positive with the mid caps, and we're positive with the Elder's Impulse system. The Wilshire was able to reclaim its 50-day moving average, as was the total U.S. stock ETF, back above the 50-day moving average with the FANG index. So these, we're seeing some confirmation and uniformity with improvements here when we look at things just based on price. So Apple was up a little over 1/3%. It's been holding up better now. And we are still going up back above the 50-day moving average with Amazon after coming all the way down to its 200-day moving average. Still trying to bounce off the 200-day moving average with Microsoft. Google setting a new all-time high, even though it closed off of its open and off of its high for the day. And then Meta trying to get back up to its 200-day moving average. And if you hear a noise in the background, I apologize. And we're still falling here with Nvidia, falling a little further below the 50-day moving average. Tesla was up, but not back up to its 50-day moving average. And we're still going down here. They must be, I don't know, I watched a few Netflix movies. They weren't that bad, but we're down 2.4%. And we're trying to get to the 50-day moving average with the Dow Jones Semiconductor Index. We're right on that now. So we kind of have to treat this as resistance until it's able to close back above this. And we're just right on the moving average here with the SMH Semiconductor ETF. And we're back up a little bit, just a little bit above this 100 level with the distance away from the 200-day moving average with the weekly chart of the Dow Jones Semiconductor Index. A little bit of a drop off in the short-term correlation because we've been going up and we were pretty much flat here with Bitcoin, but the correlation is still pretty high between the two. And then oil was down, getting into the low 58 range, back under 100 with the US dollar index. And we're down to 4% again here with the 10-year yield, where we're going up with the 10-year based on price. And we're improving, but not getting above the moving averages with the different growth to value ratios. All three of these that we show here. And we're still below the moving averages when we look at large caps, mid caps, and small caps, and these growth to value ratios. We don't have another spike here, but we have the initial spike back on October 10th, and then the confirmation spikes that have been generated here. So that's still in the background. So the markets will be closed on Thursday for Thanksgiving, and we'll have an early close at 1 p.m. Eastern time on Friday. We're positive on all three time frames again, and I don't know what's going to come out here. I look at three different economic report calendars, and all three of them for right now appear to be different. So we're kind of watching anything geopolitical. The market might like it if there's some kind of an actual peace between Russia and Ukraine there just on the surface, and then you have to look under the surface to say, okay, who's suffering, who's getting the best deals out of this whole thing as well. So I'm not really going with the economic calendar right now. When we look at November 26th, though, we are positive, and we've been seeing some positive seasonality when we go back to 2002. We're also positive with the week after options expiration. Not any real big thing here, but we do see some positive seasonality during a post-election year with the green dash line. So we have Wednesday and then Friday, and then November will be finished. And here we go with November. So the second half's looking a little bit better. The first half just didn't come through at all. So this is the positive seasonality that the market is kind of hoping will happen. This also shows positive seasonality, as does this chart and this other chart. I can show you charts all day that show that positive seasonality usually happens. Like here's another one here. And this also shows positive seasonality. But then we have to come back to reality and say, okay, these are the things that the market's actually dealing with currently. So on the warning side, we're still not looking all that good in the short term with our growth to value and discretionary to staples ratios. The money flow is still negative, as is the ultimate oscillator. We're improving, but we're still negative with our momentum oscillators. Ease of movement is negative, and the bullish percent index for the NYSE and NASDAQ 100 because they're below 50. The vortex is still negative, as is the momentum, although it's improving for the NASDAQ 100. And we do have this confirmed Hindenburg omen in the background. On the positive side, though, we are improving, but we're not seeing all three positive with our smart money indicators. And longer term, we're still hanging on to uptrends with the growth to value and discretionary to staples ratios. And we're back to positive with the S&P and NYSE McClellan oscillator and summation indexes. Swindon Trading Oscillator is positive, as is the Parabolic SAR. That's a new addition to the positive side. And the bullish percent index is above its moving average and improving there. And then I haven't been showing any of these charts, but we'll keep an eye on them. The financial sector, it's in an uptrend, but continuing to underperform the S&P. And then our longer term special K chart continues to be positive there. And then I wanted to include this because we're hitting a Fibonacci overhead resistance level here on the daily chart for the pivot point. So we want to keep an eye on that and see if that poses some kind of a problem. Because this is right around the point where we topped out last Thursday. Now we turned and went down after that. Can we go back above this? And that would be more positive. And then here are the pivot points for Wednesday's session. So the conclusion, we're back to positive again on all three time frames because we're above the various moving averages. We are improving with momentum in the short term. We're improving with the weakness in the intermediate term, but now we're back to not trending. So thank you. Have a really good day, and I will talk to you in the next video.